SQM just crushed Q2 2026 consensus. I mean, absolutely blew it out of the water.
Yeah, EPS came in at $2.31, which easily cleared the top end of that $1.91 to $2.03 estimate. And revenue hit $2.47 billion.
Which is what? Up like 136% year over year?
Exactly, 136.7%,
Yeah.
just completely bypassing the $2.24 billion high-end estimates.
And looking ahead, I mean, management's guiding for global lithium demand to top 2.1 million metric tons in 2026.
Right, with their Novandino operations slated to produce about 280,000 to 290,000 tons of LCE this year alone.
So naturally, the market loved it. Shares popped roughly 3%, trading right in the mid-$76 range following the print.
But for you listening, I mean, reading a headline beat just isn't enough. Our mission in this deep dive into the SQM earnings report and the analyst notes you shared with us is to really figure out the mechanics driving this cash machine.
Right, because to understand how their gross profit exploded by almost 400% to hit $1.26 billion, you have to unpack the segment-level performance.
Well, lithium is obviously the main driver here. They moved a record 84,000 metric tons of LCE.
Lithium carbonate equivalent.
Exactly. But it wasn't just volume, it was incredible pricing power. Their average realized prices surged nearly 160% year over year to $21.8 a kilo.
You know, it's kind of like a blockbuster movie. You have your A-lister, Lithium, doing exactly what they're paid to do, driving the box office.
Yeah, that's a good way to look at it.
But then the supporting cast just unexpectedly steals the show, and that is where the real margin expansion happened.
Right, that supporting cast being iodine and SPN.
Specialty plant nutrition.
Yeah. Iodine hit record quarterly revenue and record sales prices, up around $73.4 a kilo.
Oh, wow. And SPM volumes jumped 14%, right?
They did. Mostly because geopolitical friction in the Middle East choked off competing supply.
So SQM just swoops in to fill the void. I mean, it perfectly shows how a diversified chemical portfolio acts as a natural financial hedge.
Completely. But, bringing in all this record cash means paying record bills and funding massive future bets. Management actually accrued over $1.6 billion to the Chilean state in just the first half of the year.
That's massive.
It is. And to sustain growth, they're deploying this sweeping $3 billion CapEx plan for 2026 through 2028.
$3 billion. Where exactly is all that capital going?
Well, it funds the Mid-Holland expansion in Australia and, critically, the Salar Futuro project in Chile.
Right. Okay, but wait, let me push back a bit here. If they have this incredible production flexibility and these massive cash flows, why did analysts actually trim their full year 2026 revenue consensus down to $7.77 billion right after this report?
Well, Wall Street is definitely looking at the underlying supply dynamics. Analysts are baking in highly conservative long-term lithium pricing.
Meaning they refuse to project a short-term pricing surge into a permanent baseline.
Exactly. Plus, management themselves flagged a key risk, noting that new third-party iodine supply is entering the market later this year.
Oh, so that could seriously compress SQM's sales volumes toward year-end?
Yeah, it's a very real risk.
So Wall Street is basically saying, great quarter, but gravity still exists.
Precisely.
So with SPN demand buoyed by Middle Eastern supply shocks and lithium inexplicably tied to the global pace of EV adoption, you really have to ask yourself a question.
Right. Is SQM simply a specialty chemicals company, or are you actually investing in a real-time mirror reflecting geopolitical and macroeconomic friction?
Exactly. It's totally a mirror. And if their current margin expansion relies so heavily on external chaos like, unpredictable supply chain panics driving up spot prices, you have to wonder.
What happens to this cash machine when the world actually stabilizes? Does global peace and supply chain stability ironically become their biggest headwind?
It's definitely something to mull over. A volatile but highly lucrative tightrope to walk. Make sure to follow the show for your daily earnings coverage, keeping you ahead of the numbers.